Beyond Meat's rally is finally showing cracks, and today's session might be the first real stress test of this short squeeze. The stock is currently down about 15% midway through Thursday's trading, off by around 55 cents, sitting roughly in the $3 range after an early attempt to bounce green. The pattern is familiar, a strong opening push followed by fading strength as sellers regain control. But even with today's weakness, the story isn't over. The stock remains one of the most heavily shorted on the market, retail momentum is still strong, and as we've seen all week, sentiment can shift fast. Let's break down what's happening, why it's happening, and what to watch next. The first thing to acknowledge is that this pullback was almost inevitable. After a multi-day run that saw Beyond Meat explode from under $1 to as high as $7.69 per share, something had to give. Yesterday's session, that wild Wednesday that saw the stock double early and then collapse back to near the open, was the first sign of exhaustion. The squeeze had run hot, and even though the stock closed down only slightly, that kind of intraday reversal is usually a warning. When you add a weak aftermarket session on top of it, it set the stage for exactly what we're seeing today, a down day led by profit-taking, fading momentum, and maybe a bit of short reloading. But this isn't just a one-dimensional sell-off. What's happening today is part of the natural evolution of a squeeze cycle. In the early stages, traders flood in, volume surges, and price momentum feeds on itself. That's what we saw earlier this week. In the second stage, the stock becomes overextended, shorts scramble to cover, but late buyers begin to run out of fresh capital and intraday volatility spikes. Then comes the third stage, which we're in now, the tug-of-war phase. Bulls are still trying to keep momentum alive, but sellers are regaining confidence. It's a test of conviction, for both sides. From a technical standpoint, this move is textbook post-squeeze behavior. High volume, sharp spikes, and equally sharp pullbacks. What we're seeing today is consolidation under pressure, the market trying to find a new equilibrium after 3 days of chaos. For traders, this is the moment where emotions get tested. Those who bought near the top are feeling pain. Those who caught the early rally are debating whether to take profits or stay for another leg. And the shorts, who are deep underwater midweek, are sensing an opportunity to re-enter positions if the rally loses steam. Now, the important question, is this the end of the short squeeze, or just a reset before another wave? To answer that, let's look at what's actually driving the stock right now. There's still no major new company news. Beyond Meat hasn't released another announcement since the Walmart distribution expansion earlier in the week. The fundamentals haven't changed. The company remains in a difficult position financially, declining sales, debt on the balance sheet, and a recent debt exchange that diluted shareholders by hundreds of millions of new shares. Nothing about that has improved this week. So what's been fueling this? It's all about structure and psychology. The stock short interest remains enormous. Over 60% of the float is estimated to be shorted. That means more than half of all available shares are effectively borrowed and bet against. When a move like this begins, it creates a chain reaction. Shorts buy to cover, retail traders pile in, algorithms detect momentum, and suddenly a struggling company becomes a rocket ship. But that process can't sustain forever. Once the easiest shorts have been forced to cover, the buying pressure fades unless new catalysts appear. That's exactly what we're seeing now. The early covering has likely passed. The next wave of short squeezes, if it happens, will depend on whether the remaining shorts get trapped again by another price surge. For that to happen, the stock needs to hold current levels and show signs of strength heading into the end of the week. If it can consolidate around $3 to $4 without collapsing, that stability could draw in new buyers. But if it keeps slipping lower, the risk is that the momentum unravels completely and the story loses its energy. It's also worth noting that today's decline could be influenced by some new supply entering the market. After Beyond Meat's debt exchange deal, a large batch of new shares became eligible for trading. While it's unclear how many have actually hit the market, even the perception of new supply can pressure a stock that's been running hot. When traders know more shares might be available, it often triggers early selling from those trying to protect profits. But despite today's losses, the bigger story is still the same. Beyond Meat has captured the retail crowd again. The stock has been trending on social platforms all week. Traders are posting charts, screenshots, and memes. It's the same playbook that powered GameStop and AMC years ago. And while the companies are different, the sentiment mechanics are identical. Retail traders see a heavily shorted, low-priced stock, and they rally behind it. That kind of social momentum can last longer than most expect, especially when it becomes a symbol of defiance against institutional shorting. So, what's next? How do traders navigate this phase? First, recognize that this is a momentum trade, not a value play. Beyond Meat's financials don't justify this kind of move, and that's fine, because no one's buying it for fundamentals right now. They're buying it for the trade. That means the strategy has to reflect that reality. You can't hold this like an investment. You trade it based on levels, volume, and sentiment. Heading into the afternoon and tomorrow session, there are a few key things to watch. Number 1. Support levels. Right now, the $3 area is acting as short-term support. If the stock holds that zone and bounces, that could be the base for another squeeze attempt. If it breaks down decisively below that, momentum traders will likely start exiting in larger numbers. Number 2. Volume. For the squeeze to reignite, volume needs to remain heavy. Low volume bounces don't last, they're just temporary relief rallies. If you start seeing strong buying volume paired with large price swings, that's when you know the setup might be resetting for another push. Number 3. Retail sentiment. Keep an eye on how people are talking about BYND online tonight. If chatter remains high, if it's still trending across Reddit or X, that's a positive sign. If you start seeing fatigue, posts about bag holding or traders shifting attention to another stock, that's when you know the energy is fading. And finally, number 4. Short positioning. This is harder to track in real time, but any reports or updates on short interest levels over the next few days will be key. If it turns out many shorts are still trapped, the risk of another squeeze remains alive. But if they've successfully covered, then the upside potential diminishes. At this stage, traders need to be tactical. The setup has changed. Earlier this week, the momentum was one-directional, up only. Now, it's a knife fight. Every rally is an opportunity for sellers, and every dip is a test for buyers. If you're long, this is the time to protect capital. Trim positions, tighten stops, and avoid chasing. If you're watching from the sidelines, patience will pay off. Wait for confirmation, maybe a breakout above recent highs, or a sustained move with volume, before re-entering. The big picture remains fascinating. Beyond Meat has gone from a forgotten stock to a front-page headline again. It's proof that even in 2025, retail traders still have the power to move markets. But it's also a reminder that momentum cuts both ways. These parabolic rallies can create huge winners and huge losers, often within hours of each other. So where does Beyond Meat go from here? It's anyone's guess. If sentiment stays strong and shorts hesitate to re-enter, another rally attempt could emerge before the week is over. But if the selling pressure continues through the close, we might be watching the start of the cool-down phase, the point where traders take profits, move on, and leave the stock to drift back toward its pre-squeeze levels. For now, Beyond Meat remains a trader's stock, fast, volatile, and completely unpredictable. It's a lesson in crowd psychology, risk management, and market reflexivity all rolled into one. The story is still unfolding, but one thing is certain: this week has cemented Beyond Meat's place as one of the wildest market plays of the year. The squeeze might not be over, but the easy phase is behind us. From here on, it's a battle of conviction, bulls versus bears, retail versus resistance. Whichever side wins, one thing's for sure: this has been one unforgettable ride.